Hello, everyone. I'm Jean-Claude at BeyondMystic, and welcome to this very special report entitled The Death of the Petrodollar. With me today is the Canadian, the one and only, Rob Kirby. You can find his work at kirbyanalytics.com. Let's give him a big, warm welcome back to the show. Rob, welcome back.
Well, pleasure to be with you again, Jean-Claude, and looking forward to having a nice, light discussion about some of the things that intrigue us all.
Right. Well, thank you for framing it that way, because for some of the audience members here in the last couple of days, they've reacted to this series, The Petrodollar, or The Death of the Petrodollar. And I want to maybe follow on that thought a little bit here and give a little bit of a warning for the audience. For the most cases, this is the fourth episode now, installment in this series. For the most case, the comments are absolutely positive. People are engaged. They want to know. They're discovering the truth about what really happened, what Ponzi scheme we really find ourselves in, and perhaps the fact that we are on these very last days of this Ponzi scheme. Now, there are, for some people who listen to these interviews, they tend to drop into the fear frequency. And again, I want to make sure we're not doing these shows to put you into the fear frequency. We're actually trying to do the contrary, to inform you, to empower you with information so that you can take actions for yourself and feel less in the fear frequency and more in control of your own financial outcome. This is the goal of this series. But again, for some people right now who maybe just woke up, Rob, as you know, they're clinging on to what they think now the reality is. They've just, waken up from the mind control maybe on CNN, and they're grasping at straws to try to hold on here through this cognitive dissonance load. And now we're challenging them again with other information on a daily basis. And for some of them, it's a little bit too much. Understand that. What would you say to those people here who are maybe struggling, trying to navigate all of this very thick fog of woo that we find ourselves in? What would you say to them?
Well, I understand where a lot of people are coming from. And I understand that a lot of people tend to have I guess we refer to as a normalcy bias. I've been writing about and researching and commenting on the death of the dollar for 16 or 17 years now. Mm-hmm. And a comment that I'm quite used to hearing by a lot of people who don't follow things quite as closely as I do. I often hear the comment, well, Rob, you've been saying this for a long time and things haven't changed. Well, that's where I take issue. Things have changed. I mean, 2 years ago, we didn't have COVID. When I started writing about basically the dollar's demise, gold was under $300. I know gold's only $1,800 now, which is up by a factor of 6 plus, and it's been higher. I mean, people have a proclivity to think in terms of if they buy a house. I mean, in Toronto, house ownership means that you're a millionaire. In theory, you're a millionaire, because the average house in Toronto is now over $1.1 million in Canadian dollars. Let's just say, when I started writing about the dollar, the average house in Toronto was probably $400,000, or maybe $350,000. I'm going to say at least $4. So the value of a house has gone up by the factor of, let's just say, not quite 3 times. Price of gold's gone up 6 times, and people think they're geniuses because they bought a house. But no comment about gold. And basically the detractors of people like me who claim that the dollar has seen better days and the dollar is headed for a very, very tragic end, they'll make much ado about a real estate price going up by a factor of 3, and crow about their brilliance and their savvy investing to purchase a home that goes up 2.5 or 3 times, but no comment on gold going up 6 times. Mm-hmm. So, I mean, I find this a little bit odd because it's not consistent, and it's very dismissive of things that are occurring. Like other things that are occurring to show how different things have become in a very short space of time. just a year ago, the average amount of repo being conducted on the part of the Federal Reserve for the U.S. Treasury was about $100 billion a day. You see, and repo from a very high level, repos are basically a sponge that soaks up unwanted U.S. government securities.
Mm-hmm.
They're basically orphaned U.S. government securities where there's no demand. And of course, it's not surprising that there'd be no demand because they don't yield anything. And why would you want an income-producing product that has no yield? I mean, we heard the likes of Bill Gross make the comment earlier this week that bond funds are garbage, period. Bill Gross, for people who don't understand or realize who Bill Gross is, he's the former head of a company called PIMCO, Pacific Investment Management Company. And PIMCO is the biggest bond fund in the world. And he's referred to widely in capital markets as the bond king.
Mm-hmm.
Bill Gross, the bond king. And he's saying that fixed income is garbage, specifically sovereign fixed income. And not surprising that he would label sovereign fixed income as garbage, because we only have, I think it's, I read an article earlier this week, and I don't doubt the credentials, $14.2 trillion in sovereign debt globally has a nominal negative interest rate return. So no U.S. government debt yet has nominally negative returns. Yes, it has real negative returns, which a real return versus a nominal return. If you have a piece of government paper, a treasury bill or a bond, if it has a positive yield in nominal terms, so if it's yielding 10 basis points, which
right.
is virtually zero, it's said to have a positive rate of return nominally. But if you attach the inflation rate to that yield, we need to look no further than the work of John Williams of shadowstats.com. He tells us that inflation is running around 10% a year at least.
Mm-hmm.
Well, the government tells us it's actually around 2 or low 2s. But I mean, irrelevant whether inflation is measured at 2 or whether it's measured at 12. If you subtract 2 from 10 basis points, you're negative 190 basis points.
Yeah.
And that represents the loss in purchasing power by holding fixed income or an instrument that yields 10 basis points, if indeed inflation is 2%. And I don't believe, in my world, inflation is not 2%.
Not even
in
close.
my world, inflation is probably a lot closer to 10. And I mean, I say that because I live in a world where I buy groceries, I buy gas, I pay for insurance, and everything in my world, anything in healthcare, premiums are constantly going higher, and this malarkey that inflation is very low or benign or transitory, in my view, is absolute hogwash. So anyway, I was making the point that things are different. So, a year ago, the Fed was doing $100 billion worth of repos on a daily basis. Now we're steadily doing well in excess of $1 trillion in repos daily. And, that's an increase by a factor of 10.
Mm-hmm.
That is not consistent with the notion that things are the same and haven't changed.
Right.
See, because that represents unwanted U.S. government debt. And the only way that situation or condition gets lessens or goes away is practically in the real world the only way, the amount of repo being conducted lessens is if the Fed monetizes that debt and takes it onto its balance sheet. Well, in the last year, the Fed's balance sheet has grown from roughly, I'm going to say just in round numbers, 3.5 trillion balance sheet about a year ago. I think we're 8.3 trillion now for the Fed's balance sheet. So the Fed's balance sheet has more than doubled already.
And this is just what they're admitting to. This is just what they're admitting
yes,
to.
of course. Yeah. And listen, much of my work and much of my analysis suggests to me that the money supply numbers that we're given and the monetary aggregate data that we're given by the Fed is indeed dramatically lower than what the real amounts of money being created are. And to that end, I would direct people to the work of, in particular, Dr. Mark Skidmore from Michigan State University, who's an expert. He's a PhD economist, an expert in public finance, and he has analyzed what is available to analyze of U.S. government books, and in particular, his latest work deals with the Social Security Trust edifice. In the last year, now the piece that you're flashing there is about 21 trillion missing from 1998 to 2015, using then available U.S. government financial reporting. What has occurred since that report is the federal government has actually taken their books dark, and through an accounting regulation called FASB 56, which basically means that the U.S. government no longer is subject to accounting. Well, that applies to the general government books. The Social Security Trust Administration, they manage assets for the retirement of Americans, and they have roughly $400 billion worth of investable assets, the lion's share of which are managed by a company called BlackRock. And the turnover on this 400 billion in investable retirement assets in the latest year that Dr. Skidmore has reviewed, that 400 billion had a turnover in one calendar year of an excess of $44 trillion. Well, that's not the way retirement assets are managed anywhere in the world. Anybody who would attempt to turn over retirement assets in that magnitude would be instantly dismissed anywhere in the world, working for any organization that had any degree of transparency. Yet this shenanigans goes on in the government, and they stonewall, and they refuse to answer any questions, give any explanation as to how retirement assets could possibly being turned over at such a phenomenal rate. And I mean, it's completely and utterly ridiculous.
Right.
It's so far, it's obtuse. It's mind blowing to think. And what it represents for me, it is a massive neon sign. Think of the biggest sign you've ever seen in your life that says fraud. And really, when it really comes down to, I don't need to know the ins and outs and the gruesome details of exactly how the fraud's being committed. You see, $44 trillion in turnover on a $400 billion asset base of retirement assets doesn't fit. Right. You see, and it literally doesn't fit, Jean-Claude, to the point. If you take 5 gallons of water, you cannot put it in a 2-gallon jug. It doesn't fit. Well, 44 trillion in turnover of 400 billion in retirement assets doesn't compute.
Right.
Just doesn't compute. So that's fraud.
Yeah. And
So,
just for the audience here, as Rob was talking, I brought up the latest addendum on this missing money report here at the solaryreport.com. And so let me bring the link back down for the audience here. But Rob, going back to this here and all the unfunded liabilities, we've been saying this, you've been saying this now since 2004, I believe is when your archives started here on Rob Kirby. Yeah, 2004. I was at Queen's Park at the time, so I remember the Toronto home prices. Oh my God, what a crazy time that was. But, you know, we're not alone. We started the show by saying that, you know, we've been called tinfoil hatters and that, you know, Rob's been saying this, Jean-Claude's been saying this, but nothing ever changes, nothing ever happens. Well, I wanted to bring the audience down a memory lane here and show this clip from Charles de Gaulle in France, who in the 60s had started calling out the bluff of the American government, basically saying that, hey, we don't trust you guys anymore. You appear to be printing more paper than gold that is on your balance sheet, and we're calling your bluff. And for a number of years here, as this campaign was moving forward for France to repatriate their gold, they were called conspiracy theorists. So you and I are wearing that same hat today. And of course, that all led to 1971, when finally Nixon came on the TV on a Sunday night and temporarily, just temporarily took us off the gold standard. So set that in context here for the audience, because we need to build where we went from the gold standard to the petrodollar to now the death of the petrodollar. So let's start laying down some track here in this historical record for the audience.
Yeah, I mean, it was in the immortal words of Richard Nixon, when Charles de Gaulle called Nixon out and said, "You guys are spending way more money than you have gold to cover," because back in the day, American dollars were freely convertible internationally. I mean, domestic American, like the American population at large, was not allowed to own gold. And in fact, their gold had been confiscated back in 1934. And when it was confiscated, Americans were compensated with roughly $20 per ounce of gold that they turned into the federal authorities in America. 6 months after the gold collection had been made, the gold that had been confiscated at $20 an ounce was then revalued up to $35 an ounce, creating an instant $3 billion in 1934 dollars, a $3 billion windfall profit. Well, that $3 billion, Jean-Claude, that was used as the seed money to seed a little organization called the Exchange Stabilization Fund. Now, you and I have talked about the Exchange Stabilization Fund in previous interviews, and what the Exchange Stabilization Fund is, it's an adjunct to the U.S. Treasury that is beyond any oversight by Congress or anyone or anything. It operates in any and all markets that it sees fit to operate in. And these guys are involved, and over the years have been involved in everything from nation building, arms dealing, drug dealing, anything and everything illicit. And it is literally beyond oversight. So it's like a little black box, and I call it a hidey hole, where these trillions of dollars that are being created in the black market through the machinations, no doubt, that are occurring under our noses in the Social Security Trust edifice. These dollars are being raked off. They never even get entered into monetary aggregate data for the most part. And this Exchange Stabilization Fund becomes a repository where the powers that be can hide unimaginable wealth and resource that they can bring to bear on anything at any time they so choose to. So if precious metals prices need suppression, they have a fountain of money they can draw on in the Exchange Stabilization Fund to order or place orders for their agents, banks, to short any amount of paper metal they wish to through exchanges like the COMEX or the LBMA. If the stock market looks shaky, they can use this resource to buy stock index futures, which basically creates, I'm just going to say, it creates demand for equities so they can push the stock market up. They can use this because all of the dealings of the Exchange Stabilization Fund are all brokered through the New York Federal Reserve trading desk. So when the Exchange Stabilization Fund is active in our capital markets, it appears to industry participants that it's the Federal Reserve in the market, because they are disseminating the orders of the Exchange Stabilization Fund to the commercial banks and the bank holding companies. So to industry participants, it looks as if the Fed is in the market. And it's really not the Fed. It's really the Treasury, okay? And the Treasury is happy to let the Fed take the heat for what they are engaged in our markets, because if it was known and widely accepted around the world that the Treasury was manipulating the capital markets to the extent they do, the confidence in the dollar would have been undermined many, many, many years ago. But this gives a very, very thin veneer that it's central bank activity that's creating these basically incongruent outcomes in our capital markets that make no sense. Like when data is released that shows there's inflation in the market, historically bond yields would go higher because there were people known as bond vigilantes, and bond vigilantes would inflict the discipline on spendthrift governments. When governments spent too much, bond vigilantes would sell bonds, raising the cost of borrowing, and therefore inflicting the discipline for governments to get their finances back in order. Well, the bond vigilantes are extinct. They're like dodo birds. They existed once, but they no longer exist. And people still lament and dream about days when bond vigilantes ruled fixed income markets. They no longer do, because you see, the Exchange Stabilization Fund has this in this hidey hole that I've described. They can mobilize tens of trillions, if not hundreds of trillions of dollars that are not even acknowledged to exist. And they can mobilize them on a moment's notice. They have, furthermore, they have acting through the Fed, they have reciprocal foreign exchange lines with all other central banks that are members in the club that make up the USDX, or the dollar index. Some people refer to it as the Dixie. And its letters, when you look it up, it's DXY, which is the US dollar index. And all the members, or the currencies that make up the dollar index, they have reciprocal lines with the American administration, so that dollars can be swapped for pounds sterling. Dollars can be swapped for euro. Dollars can be swapped, US dollars can be swapped for Canadian dollars. US dollars can be swapped for Japanese yen. So if the dollar looks to be going down in at any stroke in time, American monetary authorities can basically just do a big swap. For instance, with the Japanese yen or the European Central Bank, they can raise in a keystroke. They can raise any amount of euro, any amount of Japanese yen, and then they just dump those in the open market. and restore what looks to be an equilibrium, or maintain the dollar looking pretty relative to the other fiat currencies it's measured against. It becomes a much stickier wicket when they want to make the dollar look pretty against precious metals, and when they want to make the dollar look pretty against the cryptocurrencies.
Mm-hmm.
The dollar against the metals is a much tougher exercise or trick, parlor trick, to impress on the people, because when you do too much naked shorting of paper, because central authorities don't have the physical metal to supply to the marketplace to quell insatiable demand for physical metal. So what they do is they have regulators look the other way, and they sell paper contracts for metal. And the price discovery mechanisms we have for precious metal, the two chief ones being the COMEX and the LBMA,
Mm-hmm.
they don't, in the price discovery processes they have, they can't tell the difference between a paper ounce and a physical ounce. And therefore, an infinite supply of paper metal can overwhelm the pricing structure for precious metal and make precious metal look like it's doing nothing.
Mm-hmm.
Meanwhile, as that's occurring, the premiums being paid in the physical marketplace have grown. I mean, 10 years ago, you didn't see massive premiums being paid for a physical ounce of metal relative to the paper price.
Mm-hmm.
Yeah, there may have been premiums, but they were not as big as they are today.
Mm-hmm.
So those premiums have grown, as in the amount being paid over the paper price in metals. Those amounts or spreads have grown, and that's reflecting the fact that there isn't enough physical metal to meet demand.
Mm-hmm.
Interestingly, physical metal, which comes out of the Earth's crust, which is rare, which has historically been viewed as money, real money, you can sell, due to the fact that regulators don't regulate, which has been a persistent problem in America for many, many years. You can sell something that is actually rare in physical form. You can sell infinite amounts of it in paper form with reckless abandon. And ironically, it's the cryptoverse where this fraud really shows itself, because crypto assets, let's just say Bitcoin, because Bitcoin is generally viewed as the poster child for the cryptoverse. And because blockchain technology is utilized in cryptocurrencies, you cannot sell a cryptocurrency, as in you cannot sell a Bitcoin that you possess more than once, because blockchain protocols prevent forgery of Bitcoin.
Mm-hmm.
So, and just to make sure people understand the ironic twist here, gold, which is rare, which comes out of the Earth's crust, which you can think of in terms of a gold coin. That gold coin can effectively could have 500 owners with the way gold is transacted, and with the customs that we have, and with the lack of regulation being enforced by people who are paid to do this. Meanwhile, a virtual currency like Bitcoin, which doesn't exist in physical form anywhere, you cannot sell a Bitcoin 500 times. You can only sell a Bitcoin once because blockchain, open ledger, decentralized open ledger prevents you because effectively every Bitcoin that has ever been created, there's a paper trail for it.
Mm-hmm.
That's what blockchain protocols do to the cryptos. They create a ledger that is it's widely this ledger. It's open to the whole world. You can't have a secret squirrel meeting amongst people who regulate Bitcoin and say that we're going to sell this Bitcoin 1,000 times over, 300 times over. But in effect, that's what happens in the metals market.
Right. Let me put that into context visually for the audience here. I used to teach cryptocurrencies at my local dojo, and I had created a chart to show exactly what you're saying now, that it's hard for them to hide their shenanigans when it comes to Bitcoin, as opposed to maybe precious physical gold and silver. This chart started in 2012, when at the time it took $20, and this was the introduction of the new polymer $20 bill here with Mark Carney, and that is Minister Jim Flaherty, the Minister of Finance at the time. At any rate, it took $20 to buy 5 of those Bitcoins in 2012. And then by 2016, this was Pelosi here, it took $1,000 to buy 1 single Bitcoin. So visually, you can see here, the Bitcoin is still the same. What's different here? The paper is different, of course. And by 2017, I think this was the last time I was giving this course. At that point, it was $11,000 for 1 Bitcoin. Again, the Bitcoin is still just 1 Bitcoin. And finally, I was saying to people here, what are you waiting for 2020? And I was showing a barrel of $100 bills here. And we're almost there. If you're looking at some of the predictions like Max Kaiser and Gunlock and all these other people, they're talking about maybe 120, 220,000 Bitcoin by the end of the year. And Cliff High is also talking about these $100,000 Bitcoin parties. And that's in the forecast here for the next little while. What do you make of this visual representation in the context of what you're saying, that it's very hard for them to hide their shenanigans when it comes to cryptocurrency, Rob?
Well, that's what blockchain protocols bring to the party. Blockchain protocols, that the value that blockchain offers humanity is that it brings us closer to, or if it's allowed to proliferate, it brings us back to honest commerce, honest money. Mm-hmm. You see, gold is supposed to be, and precious metal is supposed to be the ultimate form or ultimate expression of honest money, hard money. Mm-hmm. But the reality is, humanity has interceded or interfered with the price discovery mechanism for precious metal by creating derivative forms of metal, namely futures. Gold and silver futures are created in infinite amounts and are used to suppress or make precious metal look like as unattractive as possible an alternative to the dollar as can be done. So that becomes really difficult when you have a decentralized cryptocurrency with blockchain protocol. Mm-hmm. And isn't it interesting that we've heard much from officialdom in recent days and weeks, about the launch of, and I believe there's actually a pilot project that's just been announced in the last day or two, about central bank digital currencies.
CBDCs, yeah.
Yeah. Well, central bank digital currencies will not be decentralized. They will be centralized if, as, and when they are instituted and practiced. And a centralized digital currency, in my books, is a dog that will never hunt. And it amounts to allowing central banks to have control over a digital currency is tantamount to giving them a do-over with fiat money.
Right.
And what you need is decentralized, distributed ledger cryptos to keep them honest. Mm-hmm. Because you don't want the inner workings of any cryptocurrency to ever be under the roof of a central bank, because they will do to that digital currency exactly what they've done to the fiat money supply.
Right.
They will expand it, and they will cheat, and they will forge it, because it allows them to act like God, which is exactly the way they've been acting with our current irredeemable fiat money regime. So central bank, centralized digital currencies will never fly. They will never gain traction, and big money, serious money, will never, ever trust them. So that's where we are. And that's why, Jean-Claude, just going back to your little diagrams that you were showing about the ever increasing amount of dollars it takes to purchase a Bitcoin. I have been saying for the last 3 years that because of the inherent problems in the price discovery process of precious metal, that I've been known for most of the time I've been doing any public speaking or my writings to be very pro-metal, and I remain very pro-metal. And what I'm saying is that we will approach a day, or we will get to a day, when the price of metal will do what Bitcoin has already done, and maybe more. And that day is coming. And how do I know that that's going to occur? Because I keep very, very close touch with premiums being paid for physical metal over the paper price. And those premiums have steadily grown over the last number of years. And what that tells me is that it's becoming more difficult and more difficult for officialdom to suppress metals prices and keep the metals prices, keep a lid on them. And what will occur at some point in time, and I can't tell you the day it'll occur, but what will occur is that people that are doing the manipulation of metals will throw in the towel, because they're getting hammered. They're getting hammered on so many other fronts. They're being hammered by the crypto prices, which continue to go up, which they really, really don't have an effective way to curtail their prices. And the biggest narrative, or the biggest negative I hear about cryptos from officialdom, is they try to, and they really, really work hard at pushing the narrative that they're too volatile to be considered a serious investment or to be considered a reserve currency. And they're basically trying to put forward the notion that cryptocurrencies can only be ever viewed as viable in a reserve context if they're managed by central banks. And nothing could be further from the truth. And the reality is they cannot control the absolute price levels of decentralized cryptocurrencies. And to combat that, what they are doing, and I'm convinced they're doing this. I spoke to you, and I've stated that they have untold trillions of money hiding in the Exchange Stabilization Fund, and what they're doing with that money. And this is going to seem very, very counterintuitive to most people. We have there's an acronym that we use in investing. You buy low and you sell high. Okay, that's how you have sustainable investing. That's how you make, that's how you increase wealth. You buy low and you sell high. Well, in the cryptoverse, the only weapon officialdom has to discredit crypto is to say it's too volatile. How is volatility created? Well, volatility is created when people back up a truck and they dump a whole pile of something into the market at once for effect to drive the price down. So how does that work in the context of what I'm just talking about?
Right.
It goes something like this. Instead of buying low and selling high, these guys have so much fiat money at their disposal that is undeclared or unacknowledged. So think about it this way. I have $100 trillion sitting in the Exchange Stabilization Fund. And I could bring it out and I could eliminate America's debt overnight. But if I did that, there would be a collapse in the dollar, because the whole world would say, wait a second, we didn't know all that money existed. And once you show that that money does exist, people lose confidence in the currency. So that would destroy the dollar overnight. But in the meantime, I still have this 100 trillion sitting in this hidey hole. And what am I going to do with it? If I spend it in the domestic economy, I probably trigger a hyperinflation. So I want to develop and maintain the narrative that there's no alternative to the dollar, and the dollar is the only game in town. So what do? I buy high and I sell low.
Right.
I buy the cryptos high and I collect a bunch of them, and then I dump them all at once.
Yep.
And then I create these erratic looking charts where it goes up 30,000 or 20,000, but then it drops 5,000 in 5 minutes. Boy, that sure looks like the crypto market that I watch every day. And what I do is I inject volatility into that marketplace to support my narrative that it's too volatile to be taken seriously as a serious investment. Now, from there, I like to just speak about the amount of crypto turning over on a daily basis.
Okay. And
the amount of crypto, like yesterday was not a high water mark. It was just like an average day in the last week and a bit. I think the high water mark for cryptos, I think we had 180 billion in turnover one day last week, which was a big day. But I think yesterday was 129 or so billion in a day. So if you annualize 129 billion, you come up with a number of somewhere, I think, over $40 trillion in annual turnover in crypto. So I've said this before, I'll say it again. If you've got $40 trillion of turnover in crypto in a year, you categorically have trade settlement occurring in cryptocurrencies, because there's no other way you get to that number unless there's trade settlement occurring, because global GDP is only around 55 trillion.
Wow, that's a fascinating point, Robert.
So what I'm saying, Jean-Claude, cryptocurrencies are already eating off the dollar's plate. Right. And they're already squeezing the dollar out of trade settlement. Okay? Wow. And that's got to scare the daylights out of central bankers. And it is. They're scared out of their shorts. And this is why they have such a gobsmacking inclination to try and discredit them and to try and demean them and to try and say that they're not worthy of what they're already doing.
Right.
But, I mean, think about that. If you've got in excess of $40 trillion worth of cryptos changing hands on a yearly basis, you know, that is not Paul Tudor Jones, you know, trading back and forth with, you know, another, like, the numbers are too big.
Right. They're
just way too big.
Doesn't fit.
It doesn't fit. So there's already, so like what I'm saying is that they won't, the powers that be, the central banking community will not admit the ground that fiat has already lost to crypto.
Mm-hmm.
And what they're trying to do, they're trying to make people believe that the current crypto regime, which is decentralized, the current crypto regime that's working, is decentralized with this open ledger where it's traceable. And what they're trying to push and what they're trying to sell to people is the notion that they can create better crypto that will be centralized, that they look after.
Yeah.
Which means more fraud.
Yep. Yeah, how's that working for them? Every fiat dollar has always gone to zero in the past.
Well, there
so
you
they
go.
don't exactly
So
have a
it's
good
not
track
going to
record.
work.
Yeah,
it's never going to work.
Yeah.
And you know what? And it'll never gain traction.
Right.
It will never occur. It will not happen.
I mean, they'll try to legislate around it, just like Africa tried. What was that country a couple months ago? Yeah.
They will. You're right. You are so correct, Jean-Claude. They will try, and I will buy a lottery ticket tonight. Mm-hmm. And I won't win, and nor will they. Mm-hmm. Yeah. Okay? Because I'll be back at this again tomorrow.
Right.
So there you go.
And so will I. Okay. And on that note, Bill Holter will be joining us on Tuesday at 3 p.m. Eastern for the episode 5 of The Death of the Dollar. So, folks, if you want to check that out, mark that on your calendar. Let me bring that up quickly so you see the poster. And I also reached out to Dick Allgaier, and we're going to talk about not only the death of the dollar, his remote viewing from last year on this pretend, and also what he just popped out in the last day or two here in terms of this huge explosion going on for the month of September. So stay tuned for those 2 episodes here, Bill Holter, and then perhaps also Dick Allgaier coming up. Now, this is fascinating, Rob, but I wanted to go back also and add a little piece to add insult to injury to everything you've just discussed now, being stressors on the dollar. And of course, this episode is the death of the dollar. We have yet to mention this agreement that has just been signed now and concluded between Saudi Arabia and Russia. Potentially here, and we are not told what the considerations are in this contract, but potentially here, this is rescinded or supplanted the agreement that Kissinger, Nixon, and the Saudis made to prop up the petrodollar, hence the world reserve currency. And if at this point, on top of that, what you're saying now is that there's world trade already happening, settlement in cryptocurrencies, what's going to happen here if the US dollar is no longer being propped up by oil sales and perhaps the Saudis deciding to disagreement and their new backers, Russia, that perhaps they're going to sell their oil for gold, silver?
Yeah, well, listen,
what happens?
So what the Saudi arrangement with Russia that was signed the day after Afghanistan officially fell, that is a real slap in the face to dollar supremacy, because the underpinnings for the petrodollar, when America went off the gold standard and when the dollar ceased to be convertible into gold at $35 an ounce, Henry Kissinger, who was the Secretary of State for President Nixon, he made an agreement with the Saudi Arabians, who were the biggest swing producer of oil in the world. And he made an agreement with the Saudis that they would only sell their oil for dollars and would recycle those dollars into American treasury bonds to finance American debt. And that was the underpinning for the petrodollar standard. Well, years have gone by, and America has spent themselves into oblivion, and American reporting of monetary aggregates has become very unreliable in terms of, I was referring to it earlier, the amount of money in existence far exceeds, at least in my view, far exceeds what is acknowledged. So who wants to take payment for a valuable, scarce commodity in a currency that you don't even know how much of it is being created?
Right.
And that's what's at the core of the problem of people losing trust in the dollar. And the reality is, I remember a year and a half ago, back when Saudi Aramco did their IPO, and it was, I think it was, at the time, it was certainly the biggest IPO that had ever been done in the history of capital markets. And of course, when you go public and become a publicly traded company, which Aramco did, you have to produce financial statements. And looking at Saudi Aramco's financial statements a year and a half ago, I noticed that there were very sizable Chinese currency and euro on their balance sheet. Well, how does Aramco get Chinese currency and euro on their balance sheet? They only have one product they sell, and it's oil.
Mm-hmm.
So the Saudis had been selling oil to the Chinese and to European interests in currencies other than dollars. It's already been occurring, but it hasn't been admitted publicly. So
is this what this event is now? A public acknowledgement, or at least a shot across the bow?
Now yes, that's a shot across the bow. That's a public acknowledgement that going forward, the Saudis will feel free to sell their oil in any currency they wish. That will further diminish the foundation or the underpinnings of the petrodollar and should hasten its further demise.
Right.
And it was only a day after that defense agreement was announced that the Japanese basically slapped American regulators in the face in a different direction by saying that they were going all in on ivermectin. And in doing so, saying that they were gonna start officially
Rob, hold on a second here. I just want to make sure we don't lose this episode here, and some of those words might trigger some algos to delete this episode. So just maybe watch some of the, say what you need to say, but maybe watch some of the words here.
Okay. So anyway, you know, there are some things that just aren't allowed to be used or said.
Right.
In treating, you know, virus. And boy, when one country who's a big part of the financial fair, you know, part of the G5, you know, one of America's closest financial allies, when they basically say that what America has said and put forward from a health regulation standpoint is utter crap. Okay, that's a slap in the face.
Big one. Yeah.
Okay, like that is undermining the authority of the people that run the free world.
Absolutely.
And bye basement Biden. That's, you know, that is a clean shot. That isn't even a shot over the bow. That's a shot into the bowels of the ship.
Right.
And that occurred one day after the Saudi announcement regarding their defense. You know, very undermining, very, very anti the status quo. So it sure appears that the foundations, the wall around the dollar is like a sand castle on a beach and the tide's coming in.
Right.
That's
it's already long overdue. Most of these currencies live maybe 40 years or whatever. We're 50 years into it. Rob, we started the show by saying that, you know, for some people, they're like, oh, nothing's changed. Everything's the same. Don't worry. We're in this normalcy bias. Everything's fine. Clearly, what we're discussing now is tectonic plates in terms of movement on the world.
Massive changes are occurring right under our nose.
Let me bring this one up to you as well. I want your opinion on this. I interviewed David Morgan, the Silver Guru, yesterday, and I mentioned one of these tweets of his from August 25th. He was actually reporting on Gundlach's roadmap to losing the global reserve currency here. But what was interesting there, Cliff High picked this up and reported back that from his data right now and what he's seeing is that, yes, he believes that this roadmap is correct and that it will probably be gone by March 2022, which is very fast in terms of changes here happening in our world. But what was interesting here, and this is what I want your take on, the most big damage meltdown should happen in October or November. How do you see that? And maybe this is just a gut feeling at this point, Rob. You've been at this all your life in your career. What's your tingly sense or your spidey sense telling you here? What's going on between here and the month of September to suggest that maybe October and November, we're going to see the biggest damage there in this world reserve currency structure?
I think I'm very simpatico with the notion that America could effectively lose reserve currency status by March 22. To be honest with you, Jean-Claude, I'm shocked it hasn't already occurred. And because I have been thinking for years that it would occur. All I can say to you is that when America does lose reserve currency status, and I feel that it would be irresponsible to make the statement that it won't happen. To me, it's inevitable that it will. And the only question left now is the timing. And I absolutely believe it will lose. America will lose reserve currency status. And I think when it does, it will feel to most people like a lightning bolt out of a clear blue sky. Not so much to you and me, or you and I, because we've been expecting it for a long time. But when it happens, it will happen lightning fast. When it actually goes down, it will happen extremely quickly. And I've done some research over the years. I've done research on hyperinflations, and a lot of people think, oh, well, how many hyperinflations have there been? And most people will just say, oh, you guys, all you ever refer to is Zimbabwe and Weimar Germany. There have been over 200 hyperinflations in the last 200 or 300 years. And you can actually go and read about them. Most of them, virtually all of them, occur at breakneck lightning pace once they take hold. And the currency literally plummets in nominal terms. Once they get underway. And typically, they don't happen unless there is an alternative to transit to. Well, I'm going to suggest to you that we have alternatives. We have precious metal, which has been severely suppressed in terms of price, to make it look like it isn't suitable as an alternative. But nothing could be further from the truth. And additionally, we now have cryptocurrencies, which are going higher, plain and simple. And you know what, Jean-Claude, I've been saying this now for 3 years, that you see, I lump the cryptos and I lump the precious metals together, and I refer to them as the anti-dollar basket. And I've been on record very clearly for the last 3 years. I've been saying anti-dollar trades are going higher, and it will be led by cryptos, only because I'm too well aware of the suppression that is in place for metals.
Right.
So with the unlimited paper shorting, naked shorting of metals, but that has not meant that I've turned my back on metal. Metal will have its day. And you see, because the people doing the shorting of metal will give up. It is a guarantee they will give up. And when they do, you will have to own it, because there will be none for sale. Right. So the day that occurs, you will either own metal or you won't, but you will, when it breaks, you will not be able to exchange fiat money for an ounce of gold. That will occur. I plan on living to see it.
Well, it's funny you say that. In my interview with Andy Sheckman yesterday, this was the weekly precious metals report. He was sharing with the audience a conversation he had just recently had with his dad, which created a huge dilemma in his head he couldn't answer. And his dad had asked him, he said, Andy, you haven't played this through. What happens if you get that $50 million or that $100 million order tomorrow? Do you feel it? What do you do with your inventory? Do you say no to all the other small orders? Can you even source it the next day if you do feel it? What happens then? This is that aha moment. And David Morgan was saying the same thing yesterday in the show as well. He was like, well, our parents learned in World War II. We had a shock about what we want versus what we need. And he said to the point where his mother became a hoarder. She wouldn't throw out the elastic around the newspaper because she had been shocked by those events of the Depression and the war. We are about to live that shock. And I think this is what you're alluding to. And again, this is not a fear porn. It's just a matter of, if you understand what's coming, you can prepare yourself. Now, whether that's in cryptocurrencies as a hedge against the dollar, whether that's physical gold or silver, their day is going to come. And on that note too, David was saying here is like that old adage, how did you go bankrupt? Well, slowly at first, and then all of a sudden, right? So this is going to happen very quickly, where we go to no offer, as Bill Holter and Jim Sinclair often say, with respect to gold and silver. I wanted to add this little point here, and I'll get you to finish and chime in on that. There's this WebBot data report from way back when that suggested that maybe at some point we would see emerging, or the government or officialdom, the white hat version of them, go hand in hand back to Reggie Middleton to try to fix the broken stock market. And here we're talking about maybe a marriage between this blockchain technology and gold and silver. This would be perhaps the best of both worlds here, because it is very difficult and cumbersome to do day-to-day transaction in gold and silver. But with the advent of blockchain, maybe we have another venue here. What are your thoughts on that, Rob?
Well, my thoughts on that, Jean-Claude. Any proposition where let's just put it this way: any proposition where America willingly brings gold and or silver back into widespread use in monetary affairs, not going to happen very soon or willingly. And the reason for that is I don't believe America owns any gold. So they claim to be the world's biggest owner, recorded supposedly that they have 8,100 metric tons stored between West Point, Fort Knox, Denver Mint, and the Federal Reserve. I don't believe they have any, or virtually none. So that, you see, the talk of reintroducing gold into international trade settlements doesn't work if the world's biggest trading counterparty doesn't own any. So,
well, it kind of does in a way, because the world is telling the United States there, we don't care. You're not a player anymore. We've decided we're going to do our own affairs. So if the rest of the world starts selling petroleum here for gold, what's the U.S. to do?
Well, the United States is the world's biggest nuclear arsenal, and frankly, I think that's what's really being held over the world's head right now, to keep the world on the dollar standard as long as it has. Otherwise, the dollar standard would have collapsed already.
Well, let's get into that segment here and talk about what you just mentioned to me before the show here, with this video on the screen. Set that up for the audience, Rob.
And that really, really concerns me. And what we spoke of before we went on the air is the basically a collection of the world's most prominent remote viewers have all visions of mushroom clouds occurring in this month. So I hope and pray that that's not where we end up, but it wouldn't shock me if that were to occur. So for a host of reasons, and we are truly in uncharted waters right now, monetarily, geopolitically. We are absolutely we have no charts. There's really no bearings. We have nothing to really tie anything to here, because the absolute, from a financial standpoint and from a geopolitical standpoint, both at the same time, things have become so absurd and things have become so unbelievable to me in terms of, I mean, it's like economics 101 doesn't apply anymore.
Right.
It's like gravity doesn't work anymore. What's up is down. What's down is up. What's true is false. What's false is true. Every metric that ever applied to anything I've ever been taught about doesn't apply anymore. And that is extremely unsettling. It's extremely unsettling to me. And it's not sustainable. And this speaks back to the notion, there are people who say that things never change. Things are changing. Things are changing drastically.
Mm-hmm.
And things are changing at such a pace. Things are moving at the speed of faster than the speed of sound. And let's just say, when you move that fast, best you not hit anything, because the collision will be catastrophic if, as and when it occurs. Especially
when everything is built on a house of cards.
Exactly. Sound. And especially when you're flying faster than the speed of sound and you got a blindfold on, and you don't even know which direction you're pointed in.
Right. And perhaps this is where this is going here. And Gerald Salente often said, when all else fails, all this criminality and this obfuscation and the manipulation, they bring you to war. So hopefully this is not correct. But if it is, we're in for some tough times. And perhaps after that also some rude awakenings as to who has the gold, the silver, and who hasn't. So guys, crazy times indeed. If you want to have more information on this before Dick Algar comes in, please check out this video last night with Jenny Moonstone and Jason Ipfor. I'm going to bring the link down so we'll get a bit of an understanding here of what those remote viewers were actually saying here, but we'll try to get that from the horse's mouth, so to speak, and get Dick Algar here in the next couple of days to get his view on that, and also his old prediction. This was an old remote viewing session from last year. The target was in fact the death of the dollar, and in this remote viewing session, Dick was on fire. He said this is one of those that he knew he was in the moment. He could feel the energy. Sometimes you do better than others as a remote viewer, but this one, he said he was really on the ball. And this was hallways, big ornate buildings, a power place, perhaps U.S. Congress. Men in suits gather outside a big room. They're shocked. They have shocking news. They're bent over. They're sobbing. Some of them are puking. They're in disbelief. Sense of adjourning for the last time. Transfer of power. So these are the days maybe ahead of us here. And I think what Rob and I are getting at is that this, which is not being really reported in the mainstream news, at least they're not connecting the dots to us to let us know why this is a shot across the bow and what it really means. Perhaps the big sovereign wealth funds, and the big families around the world, and the banks, central banks, have been front-running this decision for a while here, because we understand that they've been picking up the physical silver off the markets at a rapid clip. And Andy was saying he hasn't seen that in his career, what's happening in the last year, how quickly the physical market is drying up. So maybe on our last words there, Rob, any last words of wisdom? I know you don't give financial advice, but for those people who are just coming into this, understanding the Ponzi scheme, and perhaps that we're at the end of that, what would you say to them in terms of trying to navigate here? Mentally, I think that's the first part here, to stay strong mentally here and to understand what's going on, and then to maybe take some moves into either precious metals or crypto or both to kind of hedge against all of this facade that is crumbling for us.
Let's put it this way. If any listeners, Jean-Claude, are to think in terms of de-dollarizing, they would be basically the last person in the room doing so. Because Saudi Arabia is de-dollarizing. I'm going to suggest to you Japan is de-dollarizing. Russia has already de-dollarized. The Chinese are de-dollarizing. Other countries like Venezuela and Iran, America, I would suggest foolishly, forced them to de-dollarize some time ago. So think about it this way. You want to be the last person in the room or the last person at the table to de-dollarize. And the fact that every major player in the world is de-dollarizing, don't you think you should have some too? And de-dollarizing means getting your assets out of direct dollar influence
and counterparty risk.
Yeah, so it's like owning things that I call the anti-dollar trades. Whether it's crypto, whether it's precious metal, whether it's some productive farmland. I mean, these are things that will revalue. You see, commerce is never going to stop. As long as there's human beings walking this planet, there will be commerce. Okay, but currencies come and go. Currencies have been coming and going since time, since we've recorded time. But commerce never stops. So if the currency is going to go, which inevitably they all do, why not have some assets that will revalue into whatever comes next? And it really comes down to just thinking about it that simply and clearly.
Yeah,
I want to own something that revalues where I maintain some semblance of purchasing power. Period.
Right. That's it. Wow, I love it. Guys, if you want to consider physical gold or silver here, please do contact Andy Scheckman here on our affiliate program link. It's beyondmystic.net/silver. This is the current promotion that Andy is providing exclusively to the Beyond Mystic audience, or the 1 ounce silver kangaroos at $365 over spot. And of course, there's a lot of other offerings there. If you're interested in other products, just please do fill out this form, and Andy and his dealers will get back to you post haste. And they've been really, really busy, as he was saying here in the last couple of weeks. He's seeing a phenomena that he's never seen before, which is these multiple seven-digit figure orders per day. He said there's something happening, and it feels like when you're in a baseball team, you know when the tide's turning, you just have that feeling. He says that's what's happening right now. So many people are realizing what Rob just said here, that everybody's de-dollarizing, and they might be the last one to start de-dollarizing, and maybe time is critical here at this point. Rob, are you still putting out some reports at KIRBY Analytics for people who want to stay in touch with you? What can they find here at KIRBY Analytics?
You know, Jean-Claude, I've been writing less than I formerly have. I still do some writing, and I've been doing a lot of media interviews, and I do a lot of private correspondence with subscribers and with people in the industry. So that's what I'm doing.
Okay. And there was a few people asking in the chat the other day, where do I start, JC? Start here. Look at all those archives. He goes back to 2006.
Well,
there's tremendous data.
There's a lot of very relevant information in there that's maybe more relevant today than when it was written years ago.
Right. Exactly. Wow. Thank you so much, Rob. And I forgot to talk about politics here today. You and I, of course, are Canadians, and we're watching very closely what's happening. And again, if we were to have this conversation, we would have to use some words that are mean words that these algorithms don't want to hear right now. So perhaps you and I will come back and do an uncensored show on our pay-per-view channel here and let loose on our Canadian politics here and share our views with the audience. That could be cool as well. But thank you so much, Rob, for being here. Thank you so much, everyone, for joining us on this show. And please do go like, share, and subscribe here on our third backup channel here. And don't forget, on Monday, or no, this is on Tuesday, Bill Holter is coming up for installment number 5 of this Death of the Petrodollar series. I can't wait to have him on here in the continuation of this conversation and this empowerment of our community here, because again, knowledge is power, and we'll end where we started. We want to make sure that you do not drop into the frequency of fear, but rather of empowerment. And information is power, and who better than Rob Kirby to share with us all of this wealth of information in a 1-hour show show. It's like a 1-year university course and then some. So thank you so much, Rob. I really appreciate you being here. So folks, that was Mr. Rob Kirby and the death of the petrodollar. Thank you so much, and we'll see you soon. Au revoir.